Money is fake, Bitcoin is real. In this video, we're going to be going over the new Bitcoin ETF that just got approved, what that means for Bitcoin, and how the supply of money is rigged to keep inflating, to keep stealing money away from your pockets. We're going to learn about inflation, how the money supply keeps increasing, fractional reserve banking, all these different types of scams that are taking money away from your pocket. Stay tuned. Hope you guys learned something. Thank you. Money is fake. Don't believe me? Watch this video.
The system works is that step 1, the government creates glorified IOUs.
When he mentions IOUs, he's talking about treasury bonds, by the way.
These bonds increase our national debt and put the public on the hook to pay it back. Step 2, IOUs are swapped to create currency. The Treasury sells the bonds to the banks.
The banks are some of the largest buyers of treasury bonds in the world, actually, and they could buy this, as you'll learn, these bonds with fake money.
The banks then turn around and sell our national debt at a profit to the Federal Reserve, which they probably own.
They do own it. They do own the Federal Reserve. It's owned by the largest institutions that funded it in the initial creation in 1913.
The Federal Reserve then opens its checkbook that doesn't have a penny in it and buys those IOUs with IOUs that it writes, checks, on a checking account that has a zero balance.
When they say that the Fed buys the bonds with no money, that means that the federal printer goes brr and just click the printer on button and it just prints.
Then they give those checks to the banks and currency just springs into existence. And then the whole process repeats.
I wish I had a money printer.
This results in a buildup of bonds at the Federal Reserve and currency at the Treasury, which is really just a supply of numbers. The Treasury then deposits the numbers in the various branches of the government, and we get to step 3.
Woo!
The government spends the numbers on promises, public works, social programs, and war. Then the government employees, contractors, and soldiers deposit their pay into the banks.
It's raining money, hallelujah, it's raining money. Woohoo!
And we get to step 4, where the banks multiply the numbers by magically inventing more IOUs through fractional reserve lending, where they steal a portion of everyone's deposit and lend it out.
In all seriousness, banks have been pulling this heist for centuries now. You guys wonder why we have such crazy inflation? They used to hide it pretty cleverly, giving out credits, IOUs, fiat currencies, based off the gold they had. But ever since we got off the gold standard under Nixon, now we just do it in plain sight. Who cares? Print as much money as we can.
That currency gets redeposited and then a portion is stolen again. And the process repeats over and over, magnifying the currency supply exponentially. Then we work for some of those numbers.
The sad truth is that we're all slaves. Slaves to money, slaves to the system. If you don't know how the system works, you're a slave to it already.
Which brings us to step 5, where our numbers are taxed. We pay tax to the IRS, who then turns our numbers over to the Treasury, so the Treasury can pay the principal plus the interest on bonds that were purchased by the Federal Reserve with a check from nothing.
As if boundless inflation wasn't enough, they just have to ring us for every last penny that we got.
Then we get to step 6, the debt ceiling delusion. The system is designed to require ever-increasing levels of debt and will eventually collapse under its own weight because politicians always kick the can down the road.
This is the only part I disagree with because it would honestly lead to World War III. The United States has the largest military by far and the most trade agreements and controls the most critical supply chains in the world, including semiconductors and oil.
Step 7. The secret owners take their cut.
There's so much mystery surrounding the Fed, but no one actually knows who owns it. The big banks have a large percentage of it, but who owns the big banks? BlackRock owns the big banks, but who owns BlackRock shares? That's a video for another day.
The world's largest banks own the Federal Reserve. Those banks make a profit selling our national debt to the Fed. They make a profit when the Fed pays them interest on the reserves held at the Fed, and the Fed pays them a 6% dividend on their ownership of the Fed.
That's a sweet deal. Cut me in on that.
This system is fundamentally evil. It funnels wealth from the working population to the government and the banking sector.
And this is just the tip of the iceberg. Let's talk about what really matters in this video. Bitcoin. Bitcoin is the best form of money we've ever had. It is actually immutable. It's actually finite. Unlike U.S. fiat, unlike gold, which is produced every year, till we don't know how much can be produced and can be transmuted with enough energy. But that's another video for another day. So Bitcoin, for the longest time, we had no idea where it was going, what the government was going to do about it, what can they do about it. Like, actually, they can't really do anything about it. The most they can do is make it illegal here in the United States. But there's so many countries that allow it now. It's like, what can they actually do? It's like, are they going to sanction like all these powerful countries, Germany, Canada, Dubai, all these, there's like dozens of countries that accept Bitcoin now. So it's like we're coming to a place where it's like, there's nothing the U.S. can really do about it. So maybe in actuality, maybe they created it, or maybe they're just going with it. So the Bitcoin ETF decision sets a huge precedent going forward. It means Bitcoin is here to stay, and there's nothing, it's here to grow, and it might have its ups and downs, but it's not going anywhere, and it's the safest form of money we have. Unlike gold, which has a paper alternative to the ETFs, which can be shorted. So gold can be shorted because, like we saw with the Germany redemption in the 80s or 90s, when Germany wanted their gold back, the United States didn't have the gold to give it. Because we were artificially shorting the price of gold to keep the price of gold lower, and we kept selling so much paper gold that we didn't actually have the physical gold because we wanted to hide inflation. So with Bitcoin here, it's really hard. It's almost impossible for the United States to hide inflation anymore. Inflation is here. Inflation here is here to stay. So all this overprinting of the United States currency, it's finally going to be shown. The reason Bitcoin can't be shorted is because it works on multiple different servers. A lot of servers from a lot of different countries come together to form the network. So it's you would have to create more Bitcoin. You would have to get 51% of the supply of the computing hardware to change the code, which it's not possible, because if they change the code, everyone would realize it, and if someone tried to get 51% of the computing power to attack the network, everyone would see it coming. That's the problem. Everyone would see it coming, and there would be changes made to the algorithm, to everything. The attacker would be effectively booted from the network. So that leaves us to our final assumption, is that like we said before, Bitcoin is here to stay. Now you can own it through ETF. There's multiple different ETFs to own it. You can choose the Frank Templeton Bitcoin ETF. Is the cheapest one at 0.19%. That's actually some of the cheapest rates to even buy like Bitcoin. I think Coinbase charges more than that just to buy and hold it. So I mean 0.19% isn't too bad, actually. It's really on the cheaper side. Don't get me wrong, that transaction, if you buy it once, you don't have to pay it every time with Coinbase, or Binance US has it too. But most institutions will want to buy it from ETFs, because ETFs have a lot more. Large institutions don't want to buy Bitcoin from Coinbase or Binance. They want to buy ETFs. Institutions they trust, that are insured, that if they lose their money, they have a recourse to getting it back. It's a lot more security. It's a lot easier for the standard investor as well, retail investor, and doesn't know much about Coinbase, doesn't want to sign up for extra brokerages, can't remember their passwords. And let me just buy this ETF. So it opens up another doorway to get into Bitcoin, and I'm excited to see what the future of Bitcoin is. There might be some temporary downward swings as profit takers and such, but now we just added another layer of a price floor on Bitcoin. Don't get me wrong, the SEC could still probably do something to Bitcoin. They could still probably try to make a move, but it's very limited now. They would have to start a world war to go against Bitcoin now. So my opinion is a thumbs up. It's not financial advice. I like Bitcoin. It's here to stay. Buy the dips, and buy the dips. If you guys like this video, be sure to like, subscribe, follow, and if you guys want more, let me know what you want in the video below. If you guys want to watch how I make trades, how we trade the options market, I have a free Discord, free for the 1,000 members, first 1,000 members, or the next 3 months. Links in my bio, guys. Thanks for watching. Appreciate you.